What's up, everyone? It's Dame, aka Dame Bon TM, and welcome to How I Turned $500 into six figures in 2 months by trading options. Let's get into it. So, today I'm going to be taking you through my exact strategies on what I use to make huge profits in a short period of time. So, I'm going to be giving you some trading milestones, some brief overview of options, some things to consider before opening a brokerage account, like trading identity, which is very important. I'm going to be going over how to build a watch list and some of my personal strategies for huge profits, like my strike price selection, buy and sell signals, entry and exit strategies, earnings run ups, trading psychology. So, we're going to go through pretty much everything that I do before I enter a trade and also everything that I do to exit a trade. So, who am I? Dane Brown, aka Dane Bon TM. I'm an options trader. I invest in real estate and the stock market, and also I'm a full-time software engineer currently. So here are a few trading milestones that I've hit in my trading career. So you see the starting deposit of $500. And then within the first 5 weeks, I was able to turn that $500 into a little over $12,600. Uh, a week after that, I was able to turn that into a little over $31,000. And then within my first 10 weeks trading, I was able to turn that $500 into over $140,000. So here are a few trades that I wanted to show you guys. PayPal was my very first trade in May. I had a PayPal 515 expiration, $124 strike price. PayPal has some pretty big earnings. I did a lot of fundamental research, a lot of fundamental analysis and technical analysis, and I actually decided to put the whole $500 into that trade. And we can see here it returned 302%, and then that $500 turned into a little over $2,000, and then we just took it from there. So, what are options? Options are contracts, which gives you control over 100 shares of stock, right? It just gives you the right to buy or sell stock at a preset price, right? The dope thing about options is you can make money whether the stock goes up or the stock goes down. And how do you profit? You profit by selling your contract. So today we're going to be focusing on calls and puts. So what are calls? Calls are type of contracts which increase as the stock price increases, right? What are puts? Puts are contracts which increases as the stock price decreases. So both calls and puts have an expiration date, and you're going to be selling these contracts before the expiration date to maximize your profit, right? So when we're selling options or we're trading options, you want to make sure that you're maximizing and capitalizing, on the full potential of each contract. So before you open a brokerage account, here are a few things that you should consider, right? So the most important thing I feel, the main thing is your mindset. Right? What type of mindset do you have? Are you going to be someone who kind of sticks it through when you see adversity? Or do you get frustrated easily? Are you more calm and level-headed? You definitely want to have the correct mindset when you're trading options or just anything general in life, right? So you definitely want to define your motivation, your whys, and your goals. What is your motivation for wanting to trade options? Why are you doing what you're doing? What type of goals do you have? Long term, short term? You want to have these clearly defined before you even open a brokerage account. How much time can you commit? Can you commit a couple of hours every day, a couple hours every week, every few weeks? Like, you want to know exactly how much time you can commit to trading options, because it is a commitment, right? You want to define your risk to reward ratio. What percentage, are you willing to risk to get that reward ratio? Is it 1 to 5, 1 to 10, 1 to 4? You want to have a very solid risk to reward ratio planned out before you open a brokerage account. right? You want to consider how you will fund your trades, right? Where's your capital going to be coming from? You don't want to spend your last bit of money trying to make trades, especially if you need it. So how will you fund your trades? Is it going to be from work? Do you have some extra disposable income? You can trade with. Definitely want to have that defined, and then you also want to define which sectors you want to trade. I'm heavy into tech, so my portfolio is mainly technology plays. So what sectors do you want to trade? Is it tech? Is it consumer discretionary, industrial? So definitely define what you want to trade. So your trading identity, right? This is one of the most important things that you must consider before opening your brokerage account. And here are a few trading identities that I've defined for you. So the first, we have a scalper, right? A scalper makes dozens of trades, making small gains on each trade, and they hold the contracts anywhere from a few seconds to an hour or so, right? This is very time consuming. You must stay in front of your computer for the most part all day, or have a super dope setup, which can allow you to get in and out of plays. Day traders, right? This is also very time consuming as well. You make a few trades per day, holding contracts anywhere from a few minutes to the entire day. Swing trader. Swing traders hold contracts from days to a few weeks. And leap traders, they hold contracts anywhere for at least 9 months or more. So me personally, I'm a mixture of a swing trader and a leap trader. I like to hold my contracts from days and weeks on end to a few months and past the year also. So, you want to define what type of trader that you want to be. And you can be a mixture of the two, but just understanding your personality and understanding your identity is very key before opening a brokerage account. So here are a few brokerage account overviews. I know a lot of us start with Robinhood. So Robinhood, as we know, is commission free. It's very user friendly, but there's no customer service number. But you definitely want to be talking to someone, especially if it's a place that you have your money. I know I started with Robinhood. I started trading on Robinhood and then eventually switched to Thinkorswim. When I was trading on Robinhood, though, I always used the Thinkorswim charts. So Thinkorswim, or TOS, a very powerful tool, a very powerful app, and great customer service. As I said, the platform is very powerful, but they do charge a commission. You can actually get this commission lowered if you call them and talk to them, which I've done so myself also. But I love this tool. It's a very powerful tool. And then also Webull and E-Trade. I haven't personally used them, but I've heard some great things about Webull and E-Trade. So building a watch list, right? How I started and how I recommend people to start is look to invest in products you're already familiar with, right? Look around your house for products you use, such as Apple. A lot of us have iPhones, a lot of us have iPads, Mac computers, Apple watches, iHome products. So a lot of us already have Apple products. So that'll be a pretty good start. Amazon. A lot of us have Amazon Prime subscriptions. So starting with a product like Amazon, they have Alexa, they have so many different products, that we are familiar with. FedEx and UPS, we see the mail carriers out all day delivering mail and packages. So, these are things that are in front of our face. Square and PayPal, especially these days, we're all using, digital payments like Square and PayPal. So these are things that we're very familiar with. And then products like Microsoft, they have, gaming consoles, operating systems. So these are things that are right in front of your face. You're probably using, at least for the last couple of years or so. So, you want to start with these since you're already familiar with them. You also want to get familiar with stocks that are in the news, right? So the news is going to make a stock move. So get familiar with what the news is talking about. Have an understanding, at least start doing some analysis and seeing what's out there, right? You want to follow knowledgeable Twitter accounts. They generate a lot of ideas and analysis. You want to make sure that these Twitter accounts that you're following, they have experience, and they have good insight and logic, right? Follow the money, right? Make a note and kind of understand where people are spending their money, and what other investors are buying in, and start researching those companies, right? If other investors are spending money and investing in it, that must mean that, they see something that you may not see. So, start following the money. And then when you're building a watch list, right, before you put it on your watch list, like, the final thing is to do that fundamental analysis, right? Make sure the company has good fundamentals. If they don't, then it probably shouldn't be on your watch list. So here are some of my personal strategies that allow me to make significant profit. The most important one is being time, right? Time is your friend. The more time your option has until expiration, the better. So this allows you to not be as vulnerable to the volatility of the market by you having time. So I like out of the money contracts that have minimum 1 to 6 months until expiration, right? When I'm doing swing trades and then my leap trades, they're a little bit longer. They're going to be held for at least a year or so in expiration, right? So you want to risk less to make more profit with multiple out of the money contracts with a lot of time on it. So I only trade companies that I know that have a lot of news also. As I said earlier, I'm heavy into tech. So most of my portfolio is technology plays, right? And I don't FOMO into plays. When we're in these group chats and we see people talking about things are running, if I haven't done fundamental analysis or technical analysis, I don't know anything about the company, I'm not jumping in just to jump in. If I have a lot of things that are running in my account that are doing well, so it's no need for me to FOMO into someone else's plays and then possibly get my account smoked. So I do not FOMO into plays. So for me, I select specific expiration dates and strike prices. So everything that I'm selecting expires on the third Friday of every month, right? And there's a reason why I'm selecting those dates, which we'll get into, but I'm also using realistic and psychological numbers for my strike prices. What do I feel like this stock can realistically and psychologically get to? And only 4 or 5 positions at once, right? I can't watch too many charts. It's too many things going on. I only want to be in a handful of positions. It makes it that much more simpler for me to kind of manage my risk and manage my accounts. So I perform my due diligence and analysis for the most part over the weekend, right? The reason why I like to do that is because the weekend, the market is closed. So it's a lot more quiet, it's a lot less noise and everything. And this can kind of give me an accurate idea of what can potentially happen during the upcoming week. So I definitely perform my fundamental analysis first. And then if a company meets my fundamental analysis criteria, then I'll move on to technical analysis, right? So I perform a watch list scan, right, every week, right? If it's on my watch list, I've already done the fundamental analysis. So from there, only thing I need to do is the technical analysis. So I'm checking the technicals on it, and then I'm seeing what can possibly move in the upcoming week or the upcoming weeks, right? I'm doing a Twitter search also. If you do a $ and the stock ticker, a bunch of things that come up on Twitter, and you can kind of generate ideas, get different perspectives from those knowledgeable accounts. And these can help you see, what other people are kind of thinking, if it confirms what you're thinking also, if it doesn't confirm that. And if I see some things that I like, of course, I still perform my own analysis and my own due diligence. I'm still drawing my own conclusions. And then if it's something that I'm not familiar with, if it's a new company, once it meets my fundamental analysis, then I'll put it on my watch list, right? I'll have to do a fundamental and technical analysis if it's not a company I'm familiar with. And if it is a company I'm familiar with, then I only need to do technical analysis because it's already on my watch list, right? So when I'm doing my technical analysis, I start by checking on a larger time frame to confirm the overall trend, right? So I go back, 180 days, sometimes up to a year. So I want to see what the stock was doing pre-March lows, how it reacted during the March lows, how it's starting to move after the March lows. So I start on a larger time frame, 180 days, 90 days. all the way down to 20-day and then the 5-day, just to see again the overall trend and then what it's been doing more recently. So I'm checking the support and resistance levels using a Fibonacci tool, which I'll provide that for you in the resources. And this is going to tell me what's going to be a good entry point and different areas of value to buy my contracts during the upcoming week, or it's going to tell me if I should wait a little bit before I enter, right? And then if a stock is at or within 10% of the 52-week high or the all-time high, I'm ignoring it for the time being, unless there's a major catalyst behind it. Generally, when a stock is at its 52-week high or close to it, there tends to be a pullback. So in order for me to avoid that, I just want to wait until it hits an area of value and I can enter the position. So how I select my strike prices, here's my formula, right? So I'm taking the average dollar amount of the previous time frame, I'm dividing that by 10, and then I'm adding that to the current price. So let's say I want to get a position that's 3 months out, right? 3 months until expiration. So I'm going to take the average dollar amount of the previous 3 months. I'm going to divide that amount by 10, and then I'm going to add that to the current price. The reason I'm dividing that by 10 is for any potential pullbacks or retracements. And this is going to give me a very accurate target to be at or around when I'm selecting my strike price, right? So from there, I'm selecting the 3 strike prices with the highest open interest, the highest volume, and the tightest bid-ask spread, right? The reason I'm selecting 3 strike prices for that particular expiration date is just in case the stock runs up. I have a price above that primary price that I can get into, or just in case that stock goes down before I enter, I have another price that I've mapped out that I can get into and I'll be a little bit closer to the money, right? So the specific date each month with the most open interest is always the 3rd Friday of every single month. You can go look that up right now. The 3rd Friday of every single month always has the most open interest and the most volume, and seem to be the most valuable times to purchase contracts for that particular expiration date. So I'm always selecting that date in any play that I decide to get into. So my primary strike price, or PSP, that's the main strike price that I have my eye on. So after I do my formula, my primary strike price, that's the most realistic price I feel like a stock can get to or reach. And again, that usually has the most open interest and the most volume and the tightest bid-ask spread, right? And then again, I'm selecting some secondary strike prices. And these are the strike prices above and below the primary strike price. And again, these have the most open interest, the most volume, and the tightest bid-ask spread. So if we look here to the left, this is what I mean about open interest and value, right? So here we have a Tesla, January 8th for 21. If we see the volume here, right, the volume is showing at the top 386. The open interest is 400 and change. You know, we go to 375, you go to 1,000 to 170. You know, so we see some pretty low volume and open interest for January 8th. Now, again, the 3rd Friday of every month, look at how this changes for January 15th. We see 3,000, 3,000, 3,000, 14,000. You know, this volume is in the thousands. This open interest is in the thousands. You know, look at the difference between the two. You know, we have the same strike prices here on the right, the same exact strike prices, but look at the difference in volume and open interest. You know, so I'm always selecting the 3rd Friday of every month. Here's another example with QQQ. Again, we look at January 8th, 21. You know, we see the volume at 136. The open interest is 1,000, a little over 1,000. 26 volume. You know, this looks about 1,800. You know, look at that. Now look at the difference on January 15th, 21. we have 15,000 or 13,000, excuse me, open interest, 11,000 open interest. This open interest in volume are in the thousands, right? So, and again, the same strike prices. See the same strike prices, but look at the difference. I think this one has 20,000 plus. This is 28,000 here. This is 41,000 here. So the third Friday of every month usually has the most open interest and the most value. And these seem to be the most valuable contracts, right? So this is what I stick to. So a few buy and sell signals that I'm considering, right? So news is the main catalyst for significant movement, right? So news makes the stock move, right? So what I'm doing is always staying tuned into the news. I get alerts from CNBC and Market Watch on my phone. So I'm always tapped into what's going on with the news, right? So, you want to have your, your technical analysis and your indicators, you want to have those on point, right? You want to have any scanners that you use to see, if your particular, any plays on your watch list hit those particular levels, because once the news comes out, it's just going to drive that stock forward. So you want to be, you want to have your technical setup on point, right? As a stock in an uptrend, right? If it's in an uptrend, you want to buy those long calls. You want to buy, those 1 to 6 month plus calls, and then also, you can take the profit from those 1 to 6 month calls, and you can put those into your leaps. You can put those into your long term accounts, to purchase dividends, however you want to do it. But it starts with those technical indicators and those buy and sell signals, right? If it's in a downtrend, you can either buy puts or you can sit and wait. Cash is definitely a position. Does a company have earnings, right? How have they reported in the past? What do you think can happen around earnings? Earnings is going to be a catalyst for some buy and sell signals as well. And as I mentioned, cash is a position, right? You don't have to always be in a play, especially if it's something that that's not set up correctly or it doesn't hit your criteria. You can just hold on to your cash. You're not making anything, but you're also not losing anything. So here are a few entry strategies. You definitely want to be patient, be patient, be patient, be patient, be patient, right? Patience is a major part when it comes to trading. Patience is going to get you a lot of money. It's going to stop you from making a lot of mistakes. So definitely be patient. The 3X rule, right? Before I get into a play, do I believe that this can make me a minimum of 3X or 300%? If I don't believe that, then it doesn't make sense for me to get into the play, right? I'm only taking high probability trades with confirmation. So I'm waiting for my indicators to hit my criteria before I jump in. And I personally use the Fibonacci tool, this automatic Fibonacci tool. It's a script using the MACD, the VWAP, the RSI, the TTM squeeze, and I'm monitoring price action and the size of the candlesticks, right? So I'm also entering positions from areas of value. So Fibonacci is automatically going to chart support and resistance levels. So I want to make sure that I'm entering at a support level, so I get the most value from my position. Before I enter, I'm checking the high and the low over the last 10 to 20 days, right? I never want to enter at a resistance level or when the stock hits the high of the day or its all-time high, right? There will always be a pullback, and patience is definitely the key. You have to have patience. I'm also looking at price action. How does the stock move at a certain price level, right? Price action is a major part of the entry strategy also. I'm also looking to enter at a price that's below the mark, right? So the mark is usually the average price, but if I can get in below that, I'm usually profitable as soon as I enter the trade. Whether it be 1%, 2%, 5%, I want to make sure that I'm not overpaying and I'm looking to get in below the mark. And then I'm also scaling into positions. I don't load too many right away. You can always grab 1 or 2 contracts, see how it's moving. If it confirms what you believed, and then start to scale in. Start to scale in slowly on a pullback. You want to avoid any major possible losses. You want to maximize the potential, but you also want to avoid any major loss. So start scaling in slow. So here's what we see when I mean by checking the high and the low of a contract before getting in. So here's a contract for QQQ, and we start to see over this time frame, the low was $1, the high is $4.14, and it's currently around $3.11, right? So if I were to get into this trade, I'll be entering, near the high. It did come to an area of support, major area of support right here, but I would still be I would still be getting in when it's a little bit higher. So based on my other indicators, I will have to look at those and decide if this is something that I would want to do. Do I believe that it could run up more? I'm looking at the RSI, which is exactly at 50, so it's at a good level. But if we look at the MACD here, the MACD crossed under the signal line, right, and it's starting to go to the downside. So this would be a decision that I made before I get in the trade. Do I want to enter? It's not at the high. It started to have some pullback, and it looks to be at an area of value. But do I feel comfortable entering this trade, and do I believe that this can make me a minimum of 3x? Right, confirmation and high probability setups. Again, we want to wait for the ideal setup, right? What's the direction of the TTM squeeze? Right, and we have key Fibonacci levels. So TTM squeeze is an indicator that combines a few different indicators, which includes the Bollinger Bands, right? So it tracks volatility and it tracks momentum also. Fibonacci. So Fibonacci is based on numerical sequences, which are used in nature and in trading, right? So we have natural and psychological numbers where we see levels act as support and resistance. MACD color transitions, right? It's going from a dark, strong red to a lighter red. We want to pay attention to these color transitions. We want to look at the RSI levels, right? We want to monitor price action and volume, right? Another confirmation for high probability setup is, the first full candle above the VWAP, right? So if we look at like an entry strategy and we see our other indicators and our other levels looking as we want it, and we start to see that first full green candle, the first body to open above the VWAP and everything is pointing to the upside, that's a high probability trade, a high probability setup, right? Fibonacci, if we see it coming to an area of support and everything else looks correct, the TTM squeeze direction is going to the upside. These are pieces of confirmation and high probability setups, right, that you want to use. So here's how my chart looks, right? Again, I have this Fibonacci tool set up. I'm looking at price action. I have volume. I have the RSI. I have the MACD, and then I have the TTM squeeze. So if we look here around 1A and 1B, right? So when it comes to Fibonacci, it goes from the 0% level to 100%. So the 0% level being at the bottom, the 100% level being at the top, right? These levels in between are 23.6 here, 38.2 here. We have the 50% level here, the 61.8% level here, which is called the golden ratio. We have the 78.6 level here, and then again, the 100% level here. So the 100% level in an uptrend is going to be the top, the 0% is going to be the bottom. So if we look at 1A right here for the 38.2 level, we see some consolidation, right? So right now, this is acting as resistance. So when we start to see consolidation and an uptrend at a resistance level, sometimes that's a good indicator that the stock is going to continue upwards, right? So we see that consolidation. We see that consolidation here at this resistance level. We see the RSI is kind of getting towards that upper level. We see that MACD, again, that color transition that goes from that strong red to that lighter red, and it's starting to go to the upside. And then we see the TTM start to go from that strong blue, which is an indicator of going to the downside, to that lighter blue, which means it's going to be going back to the upside. So we see it acting as, we see it consolidating, looking at resistance, and then it breaks through, right? It starts to break through that 38.2 level. It starts to come back, breaks through, it tries to touch the 50% level, but then comes back, right? Again, Fibonacci acts as support and resistance. It automatically charts it for you. So it always respects the support and resistance levels for the most part. So it comes back to this level. We see it start to downtrend or retrace a little bit, right? We see the RSI start to get to oversold. We see the MACD start to cross under here, right? Start to go to the downside, and then also we start to see that TTM squeeze kind of go from that bright blue to a darker blue down to a red. So these are all areas and indicators that I'm looking at before entering the trade, right? So it comes back down to this 23.6% fib level. It tried to touch it, it doesn't, and then it starts to go on an uptrend, right? And if we look here again, the RSI is oversold. The MACD, as we can see, starts to go to the upside, right? That MACD line starts to cross the signal line. And then the TTM squeeze, again, goes from that strong dark red to a yellow, which means that a run to the upside is more than likely coming. And that's what happened, right? Between 1B and 1C, we get a run up, with respect to the levels in between. So we get it come to this 50% level, we see some pullback, and then we start to see it run up again, right? It touches this level, we start to see some pullback, some consolidation, and then it runs up again, right? We see some consolidation at this level before the final leg up, right? Now we see at 1C, we get some pullback. And then what do we also see here? We see the RSI get smoking hot, and it starts to go down. We see the MACD start to cross under the signal line and go to the downside, right? We see the TTM squeeze, again, go from that bright blue, which is indication that it's going to the upside again, and it starts to go to that downside. When you see that dark blue start to go to red, it may be time to start exiting that position along with those other indicators. So we know we got to a high at that level. So we know the next level, once it goes to 100%, is going to be that 78.6% level. So we have to be mindful of the levels. And again, look, as it starts to go to the downside, we see some consolidation going down at this level. Then it comes down again, touches this level, try to come back up. Look at the respect to these different levels. Look how accurate these levels are. This Fibonacci tool is very, very powerful. So then we see it come all the way down to the 23.6 level for this time frame, right? Hits that 23.6 level, the buyers step in, and it runs back up a little bit, right? So 23.6, then it tests that 38.2% level again. Could not break above it. Comes right back down to 23.6. Look how much it respects these levels. Then we see it run up again, right? So it tried this level twice. We can see, it's still oversold, right? The MACD is kind of still below, but then we see in 2B, the uptrend starts to resume again. And then what do we see? The RSI starts to increase. The MACD starts to cross above the signal line, and then the TTM squeeze goes from that strong dark red to that yellow, so we know a move to the upside is coming, right? And then that's what happens. Between 2B to this point here, we see some upside movement, right? Also looking at the size of the candlesticks, we're looking at the price action. We want to know what's coming at different levels. So, when we get to these levels, we want to be mindful and maybe start taking profit and scaling out of our positions. So we see again right here, it breaks above that 78.6 level, and then it starts to come back down. RSI gets super hot. The MACD starts to cross under the signal, it starts to go down, and we see that squeeze, right? When we see that red, that means the squeeze is coming, starting to squeeze to the downside. And the same thing with 3A, right? Comes all the way down under that 38.2. It acts like it's going to touch the 23.6. The buyer steps in, and then it goes back in. So definitely these Fibonacci levels are key areas that you want to pay attention to. So, I'm bullish by nature, and it took me a little bit of time to kind of get used to understanding how to hedge my account, but you definitely want to hedge your account and hedge your positions, right? When the market is running up, you definitely want to have some puts in your portfolio, right? It's going to be insurance on your portfolio, whether you decide to profit, on puts, or it's just you want to keep it as insurance to just make sure that you're not losing anything. You definitely want to have some puts in your portfolio to protect against the downside, right? So for me, I like to do it on entire indexes. So I have puts on QQQ, especially since I'm so heavy into tech, and then SPY, SPX puts, right? You also want to monitor your indicators and the VIX levels, right? So these are going to be important parts on how to hedge your account, whether you should get puts on your portfolio. I always recommend, especially when things are running up and getting hot, it's always going to be some pullback, and puts are going to be the best way to kind of mitigate those risks and manage your account. So for exit strategies, right? Exit strategy should be in place before you enter any position, right? I would even go as far as saying that before you even open your brokerage account, you want to have how are you going to exit these trades in place, right? So you want to monitor your indicators. Definitely want to monitor your indicators and price action on a larger time frame to confirm the overall direction and the trend. So yeah, you can look at these shorter time frames, but since we're getting into longer positions, you want to look at a larger time frame, whether it be the 1 hour, the 15-minute, the 1 day. You kind of want to monitor these indicators and price action to confirm the overall trend. You want to scale out. So what I do is, once I see 100% return on a play, I automatically sell half. Now, what does this do? This makes everything else freebies. This gives me back my initial return. So now I'm just playing with house money, right? You really can't lose when you're playing with house money, but I'm selling 100% at half. I'm selling half at 100%. Then once I hit 200%, I'm usually scaling out and selling another quarter of that position, right? And then so on and so forth. From there, it's like, okay, if you want to put a trailing stop on your position, that's cool. If not, if you just want to kind of let it run up and see what it can do. But the most important thing is you secured your initial investment. You still have your profit when you hit that 200%, and you can kind of let the rest run and manage your account. You definitely want to stick to your stop loss target, whatever that is, 20%, 30%, 10%, stick to it. A lot of people, they come and ask that, hey, I see a position is down 50 or 60%, should I sell? And it's like, a lot of people are seeing that plays that have been down 50 or 60% came back to life. But if you're looking at every play like that, that's a bad way to kind of manage your account, in my opinion, because you're losing more at that point, where you could redeploy that capital somewhere else if you stick to your stop loss, and then you can get that loss back, whether it's 20, 30%, you can get that back tenfold, if you're managing your account the right way. Average down on a dip if you decide to. If it's a play that you really believe in, you can either average down and get more contracts, or again, stick to your stop loss target. And you never want to be greedy. If you have a target set for your account, like if you only wanted 20% return, 30%, 40%, whatever you wanted, 100%, stick to that target. Exit the position. There's always going to be another play. You don't need to be greedy and stay in a play longer than you need to, right? The market doesn't owe you anything. The market doesn't care what you think should happen or what you want to happen. The market is going to do what it wants to do. Again, it does not owe you anything, so never get greedy. So when it comes to earnings, right, we like to play earnings run-up. So holding a position through earnings is always a gamble. It's a risk, and we don't really want to gamble, but we want to make high probability trades, right? So how I look at it is, I look how the company performed over the last 4 quarters, right? Over the last year. I see if they got it up, if they got it down, if it was neutral. I kind of see what the analysts' expectations are, how accurate the analysts have been in the past. I'm looking to see how Ivy Crush impacted the premiums in the past. And then what I'm doing is, if I decide to do the earnings run-up, I'm buying contracts at least 3 to 4 weeks out before they report, so that way I can catch that full run-up, right? They're going to be news and things being reported. It's going to be that anticipation, and then sometimes the run-up is the best part, because once earnings come out, it could be a letdown, and then the stock falls, right? It takes a dip. So, play that run-up. You can hold the contracts anywhere up into a few days before. You can even sell the day of earnings, but I'm making sure I'm also scaling out during that time. So if I'm hitting those levels, if I hit 100%, again, I'm selling half of my position, so now the rest is free. 200%, I'm selling another quarter, so I'm scaling out through that entire time, right? If I do decide to hold the contracts through earnings, I'm making sure that I have enough time after earnings, just in case it dips. I'm not getting, I'm not getting beat up on that position. But again, I took profits before that, so me holding after earnings, along with that time, it either makes it free, and it's a very small position, or I'm not going to hold it all. But that's something I'm deciding based on, how it's been moving, what it did in its previous earnings. So if we take a look here at PayPal, over the last few quarters, we see how it moved before and after earnings, right? So if we take a look here, we have some, some steady uptrends here, steady uptrend here, and then once the earnings report came out, PayPal shoots up, right? We see that here. So it was below the 23.6 fib level. Earnings reported, they had good earnings, it shot up. We see some resistance here at this 23.6, this 38.2% fib level, right? And then it goes and breaks above it. And then we see a steady, slow uptrend, right? We see a dip here, earnings comes out again, shoots up, right? We see a little bit of a dip, and it's respecting these levels. Look how much it's respecting these levels. See? Respecting these levels. Then we get a bit of a dip, still respects the levels. But now we get still an uptrend before earnings, right? So we get an uptrend respecting this level right here, the 78.6 level, respecting it, breaks above it a little bit, comes down for a retracement. After earnings again, shoots up. And then we see a dip here. So look how it performed before earnings and after earnings. That's key. And then also looking at the other indicators from the volume, the RSI, the MACD, and the TTM squeeze. Right, some account management tips here. You must learn how to manage your own account. Asking people, should you buy or should you sell? Everyone has different goals. Everyone has different account sizes. So managing your own account is key if you want to be successful. As I said before, don't get greedy. The market doesn't owe you anything. The market doesn't care what you think should happen, what you want to happen. You definitely want to, stick to your targets and never get too greedy. Remember, news events are a major catalyst for movement, right? So, you want to have your technical setup in place, so that way when a news event comes, you can be already in position for you to catch, the full movement of that play. You definitely want to be honest with yourself. You're going to make money, you're going to lose money. You want to keep the same confidence either way. Like one day doesn't make or break you. One bad trade doesn't make or break you. You know, one good trade doesn't make or break you. Keep that same confidence. Understand your short and your long-term goals, right, and your risk profile. So again, what are your short-term goals? You know, are you looking to get a certain dollar amount? Are you looking to see a certain percentage? You know, what are your long-term goals? Same thing, certain dollar amount. You know, are you looking to walk away? You know, are you looking to retire? What are you looking to do, short-term and long-term? Don't overtrade. You know, kind of just buy less, chill. Don't overtrade. You know, again, we're only entering plays that we feel that can go minimum 3x. So you don't have to overtrade, right? And you don't have to trade every day. If you're not feeling it today, or it's a day you're not feeling it, you don't have to trade, right? You never want to counter trade, right? You want to trade with the trend. You know, that's a quick way to kind of blow up your account by counter trading, right? You don't want to revenge trade or trade emotionally. Let's say a position doesn't go your way, it doesn't make sense to try to revenge trade or jump into another play just to get that money back. No, you know, you want to take a step back, kind of analyze, you know, what went wrong, you know, whether it's analysis or just the market didn't agree with you. You know, you definitely don't want to revenge trade or trade emotionally, right? Take breaks if you need it, right? Step away from your desk. Again, we're doing longer term plays, so you don't have to be constantly at your computer all day. You can if you want to, but definitely want to take those breaks. Get some exercise in, get some sun in. Definitely take those breaks, right? You want to build your account up, and then you want to play with profits, right? Start slow and steady. I mean, slow and steady, understanding concept, understanding how you wanna move is very key, right? Um, you can pay yourself weekly or bi-weekly if you need it. If this is money that you feel like you need to pay your bills or whatever you need to do, definitely pay yourself. You worked hard for it. Be sure to treat yourself. Um, I would recommend don't keep super large amounts in your account because you're gonna start to do things that you wouldn't normally do, right? So let's say you make a significant amount of money, off of, you spent a little bit of money, you made a crazy amount of money just by seeing that in your account. Sometimes you may do things that didn't get you there. So I would recommend if you see a lot of profit, take some of that profit, move it to another account. So that way, it's safe and secure. The most important thing we want to do is secure our profit, right? And don't try to predict what will happen in the market or time the market, right? I like to say it's better to miss some of the move and have that confirmation than to try to predict and get your account smoked. So trading psychology, to me, is like the most important of everything, right? Like, what is your mindset like? What is your psychology like? Do you FOMO into plays? If you're FOMO into plays, ask yourself, why are you FOMO into plays? Again, if I have a bunch of things in my account that are running already, I don't need to FOMO into someone else's play that I didn't do my own DD on, I didn't do my own analysis on, and then that can get my account smoked. So don't FOMO into a play, right? Are you getting into plays too early, and losing on some trades? Why are you getting in too early? Are you trying to predict and anticipate what's going on without getting that confirmation? Is it not high probability? Are you exiting a position too early? What's your exit strategy? Are you sticking to your exit plan, right? Do you feel like you're an emotional trader? Ask yourself, why am I being so emotional, right? You want to be emotionless with these trades. You want to be very emotionless. If something is not going your way, something's not acting right, just cut it. If it's going right, then keep it. But don't want to be too emotional when it comes to trading. You want to be level-headed, right? Do you feel like you overtrade? Right? Why are you over trading? What's the reason for over trading? Right? Are you second guessing yourself? Why do you feel like, you're second guessing yourself? Do you not trust in your own analysis and your own due diligence? Right? Don't second guess yourself. Right? Are you taking frequent breaks? Right? You need that mental rest. You want to be operating at maximum levels. So take those breaks that you need. Right? Do you have a routine? What is your routine before entering a trade, exiting a trade? What's your routine before anything during that week? Right? Are you self-aware? right? Do you know why you're entering plays? Do you know why you're winning? Do you know why you're losing, right? You definitely want to have that self-awareness. Do you know how to pivot or transition? So if a trade isn't going your way or play isn't going your way, what's your next move? What's your next play? You definitely want to have different plays, in your arsenal to make sure that you're still capitalizing on a trade. You know what to do. And are you too greedy? What's the purpose of being too greedy, right? Is this something you're trying to prove to yourself? Like, is this something you're trying to do? But you never want to get too greedy. So here's some resources that definitely helped me. At the top, you can see I have a YouTube video called Mind Over Market, right? And this kind of helps you navigate through things that you're going to experience through the market, right? So this is a mindset video. I have a bunch of videos for indicators and different things that I use, and then I'm also going to provide you with that Fibonacci script that I've been using, right? So it's a TOS Thinkorswim script. I'm going to provide those in the resources section. So everything that I know, again, you guys will know. So here's some of my contact information. My email, danebondtm@gmail.com. You can send me an email if you want to contact me. But the best way I would say to contact me would be Instagram or Twitter, danebondtm for both. I definitely want to provide you guys with as much value as possible, answer any questions possible that you may have. So definitely feel free to reach out to me. Let's stay connected. The goal is to print this money. Let's do it together. So anything that I know, I'll make sure that you guys know. And let's get it, man. Let's run it up for 2021 and beyond. All right. Thank you guys for tapping in. Again, I'm Dane Bond. Dane Bond TM. Talk to you soon. Peace.